Hi everyone, this is Jason Barrack of Wall Street from E Street. Welcome back to another Wall Street from E Street podcast interview. Today's special guest is a returning guest. His website is now called The Red Pill for the Red Pilled. He worked on Wall Street. He was also a manager at a Silicon Valley firm, and he was a Wall Street lawyer as well. He has the level-headed, balanced coverage of gold and silver that I don't think is available pretty much anywhere else compared to a lot of the hardcore bias gold pumpers and other people in the alt media. Louis Cammarosano of Smaulgld, thank you for joining me again.
Oh, Jason, thanks for the introduction, and happy to be here again.
Now, since you are the red pilled for the red pill, you definitely have a non-Goldbug, non-majority Goldbug opinion on China. So let's talk about China. You had an interesting interview a couple weeks ago with one of your listeners, and there was a lot of truth in that interview. What's your view on China?
My view on China is that there is a view on China in the gold community that is so geared towards a gold result that no matter what you say, 2 plus 2 equals gold. And they believe that China is in this dominant position and that the United States is so messed up and so debt-ridden and that China has just got it going on and that they have Sun Tzu behind them. They're playing the long game. And they're just going to crush the U.S. dollar, and that China's #1 goal in the world and their #1 national goal is to accumulate gold and destroy the dollar. Now, that view, Jason, is 180 degrees further from the truth. Sure, they don't like the fact that the dollar is the world reserve currency and that they take advantage of it. No country likes that. But China also benefits from the dollar. We're going to get into how. But the part that people miss about China is that whatever you want to say about the United States, you can equally say about China. So, for example, criticism about the United States. So much debt, unfunded liabilities, unsustainable, dollar's going to collapse. Well, people don't realize that China has its own debt monster. They have public internal debt of about 40 trillion. And don't you think that China has unfunded liabilities for 1.2 billion citizens for their Social Security that they don't put on the books? They don't have much public external debt because you know why? No one's going to lend them money in Yuan. They don't want to get the Yuan back. They've got state-owned enterprises. They basically issue a lot of dollar bonds. The sovereign government issued dollar bonds just last week, 2-3 billion. They've got private household debt. And Chinese debt is so bad that their own bankers, in an article in Business Insider, says it's so bad because they think it's out of control. But forget general bankers and forget stories in Business Insiders. China's own People's Bank of China governor warned of a Minsky moment last week. And basically what he's saying is that they have borrowed so much money to create their wealth, to create their GDP, that they are past the point now when they borrow money that they get less of a return than the amount that they borrow. So it's left the country with a series of zombie banks, zombie corporations that are not making money, and that the government now in 2017 is going to buy 24% of the residential real estate. So you're talking about a country who has created its economic miracle by massively borrowing more than the United States has been borrowing the last 20, 30 years. And so when you have the Bank of China's governor saying that there's a Minsky moment, and he's concerned that the speculative property bubbles pose a systemic financial risk, that's what he's saying. And that too much exuberance, this is his words, when things are going well causes tensions to build up. That could lead to a sharp correction eventually to a so-called Minsky moment. That is what we must really guard against. That's from that'd be like Janet Yellen saying that. And in the Goldbugs, they miss that. They think, oh no, China's playing the long game. China's going to roll out this gold-backed yuan, which is 100% complete nonsense. It has no source whatsoever. It doesn't even make any sense that they would do it. And yet, because people in the gold community have been fed this narrative about China, how they're just rolling over the rest of the world, and they're just going to crush the petrodollar. And they want to believe this. Why? because they hold gold and they think they're going to become rich. But none of the gold stories about China, they look at China from the perspective of gold rather from the perspective of what China actually is and what they're doing. So when you talk about the gold-backed yuan story and internationalizing the yuan, China has never announced that they're going to back the yuan with gold. They've also stated, and they've been doing this for years, that the internationalization of the yuan is going to take years, if not decades. So the first story that came out about the gold-backed yuan was that it was going to be, and there's still people out there touting this story, that an oil producer is going to be able to sell oil to China. China's going to give them yuan, and then they're going to be able to convert it on the Shanghai Gold Exchange and get physical delivery for gold. That story, first of all, there's nothing in this contract, this yuan-denominated oil futures contract, that says anything about gold. It clearly is not going to be delivery on the Shanghai Gold Exchange. There's no reason why China would do well. The reason people believe it, Jason, is because they think, yeah, great. So this now means greater gold demand, so my gold is going to go up. Why would China want to, besides the fact that they haven't announced it, why would China want to offer up gold that they've accumulated just to purchase oil when they can buy oil for dollars? They say, well, you want to internationalize the yuan. Well, you're not internationalizing the yuan with that arrangement, Jason. What you're doing is you're internationalizing gold. Even better, say the Goldbugs. Now there's greater gold demand, but it's nonsense. So some of the people who promoted the gold-backed yuan story, and this all started with the Asian Nikkei Review article on September 1st that said there was going to be this gold-backed yuan, some of those people have backed away from that story and said, no, there's not going to be, because they realized that the Shanghai Gold Exchange doesn't allow you to take gold out of the country. There's a reason. China imports gold, produces gold. They don't ship it out, and they're certainly not going to ship it out to oil producers. They then changed the story to, well, they're going to get their yuan, these oil producers, and they're going to buy gold elsewhere. Now, that's a ridiculous story, too, because if you're relying on the oil producers to take their proceeds from selling oil and going to buy gold, well, they can already do that if they want. They can take their dollars, which are worthless toilet paper, and they can go buy gold if they want. They don't do it. But Jason, even more funny is they think that somehow that the oil producers are going to take their dollars and go and buy gold, and therefore that creates gold demand. That's like saying your employer pays you in dollars, and then you go and take your dollars and buy gold, that somehow your employer is backing your employment contract with gold. And then if he hires two more people, he creates more gold demand because those two people are going to get their dollars and go buy gold with it. The whole story doesn't make a stitch of sense. And as I said from the beginning, there's not one source for that story. The only source for that story was an article in Nikkei Asian Review that said China is expected to launch a gold-backed yuan, and it doesn't say it's expected by who, and there's been no Chinese announcement on it. And you know what people say about that? Well, of course, Sun Tzu, China would never announce that because China plays all this stuff about how China's so smart, they don't tell you what they're doing. Well, if you believe China's so smart and they don't tell you what you're doing, why would anyone ever lend money to them or do business with them if you think that is a positive, that they don't tell you what they're up to? See, that's where this whole myth of China has come out. First of all, that's not true. China wants transparency. They don't want to be known as the country that hides everything from everybody, and then the art of war and the surprise, they just jump on and say, there's the gold-backed yuan, game over. That's a Goldbug fantasy that somehow that's going to happen. It's not going to happen. What they're going to do, the way I understand the contract is, there is no physical delivery of gold, there's no physical delivery of oil, and the pricing is still in dollars. All it is a hedging instrument that you can hedge in yuan. It's a slow process. But people have it in their mind because they've heard just about everybody in the gold community repeat the story that the oil producers are going to just walk right into the Shanghai Gold Exchange with a pile of yuan that they just got from selling gold, and they're going to convert it into into gold, and that's going to make the gold price go skyrocketing. It's not going to happen.
With a number of your videos lately, Lewis, I think you've provided an inconvenient truth about China that Goldbugs just don't want to hear. Now, if there are People's Bank of China officials that do come out, or there is, high-ranking members of the Communist Party, and they do start talking about the gold-backed Petro Yuan, I reserve my right to change views, but I'm in your camp. I don't agree with a lot of these gold bugs. A lot of them have been predicting, this is going to send the gold price skyrocketing. It actually hasn't. And you brought up a lot of the issues and problems that China has, and they're very similar in certain aspects to what the U.S. was going through really before and after World War I. I think China is going to end up being, Lewis, a case study for the failure of Keynesian economic central planning on a scale that the world has never seen before. Let me add to some of your arguments there. Chinese total debt has now surpassed 300% of GDP. In the first 9 months of the year, the money supply has increased by 9.2%, which is a lot higher than the estimates. And China has added more debt in the first 9 months of this year, 2017, than the U.S., Japan, and the European Union combined. Not one of those countries combined. So we're really unprecedented. Now, you mentioned 40 trillion. That's in US dollars. The People's Bank of China on their own website publicly lists them having 220 trillion with a T, RMB in liabilities. So they are extremely leveraged. This is an unprecedented Keynesian central planning credit bubble. One of the other things I wanted to talk about too is that, you said top priorities for the Chinese government. The Goldbugs talk about gold for China. I think the top priorities for the Chinese government, Lewis, are to make sure that the, political people in power, there's no revolution. The government doesn't get overthrown. You've kind of seen a consolidation of power with Xi, where, he's taken longer. He just got reelected for another additional term. And the other one is low unemployment. So which is what you would expect basically out of like a centrally planned model. So if they can keep their economy, there's actually a good article by Daniel Lacalle, I'm going to have him on next week, and he talks about how China can't deleverage because if they start deleveraging and allow this credit bubble to burst, then they're risking those two things that I just mentioned happening.
Well, here's the story. Here's what happens with China. Well, another thing that I don't think people understand, the miracle is that they all have moved China from a agrarian culture with subsistence farmers. They've moved over 200 million people from the country into the city, and they've got to keep those people employed. Now, if you are China, and that is your number one goal. Your number one goal is staying in power, keeping the people fed, keeping the people from revolting. It's not crashing the dollar and boosting the gold price. So if China actually decided they were going to upset the apple cart and they were going to just march into Saudi Arabia and say, hey, guess what? You got to take the yuan from now on. And anybody else, you got to pay, we're going to pay you in yuan, but you can convert it into dollars. If they were to do something like that, so bold, and it would upset their trade with the United States and Europe, which is basically what's fueling their economy. They are not going to just decide, oh, we don't need to deal with the United States because we're trying to collapse the dollar. So we'll just forego trade with the United States if they don't like this. And we'll also forego trade with the United States allies in Europe, which is their number one trade partner, and Japan. And we'll just do stuff along the Silk Road. That would just totally collapse their economy. And to show that China, number one goal, maybe in the future to collapse the dollars, they have $1.2 trillion worth of U.S. Treasuries. Now, we've heard stories. They're dumping Treasuries. They're not dumping Treasuries. That story is about 10 months old. They have added Treasuries each and every month for the last 10 months. Why? They like to have Treasuries to use as collateral so they can borrow money. So they sold $1 trillion worth of reserves defending the yuan over the last 18 months. And now they're rebuilding their reserves, and their reserves are in US dollars. And a lot of people think that the yuan is somehow some type of international currency that's gaining prominence, and it's going to be the same size as the United States soon. All they have to do is launch this gold-backed yuan thing. In 2015, 2.8% of international payments were in Chinese yuan. Today, it's 1.9%. They've made no progress. The composition of foreign reserves, China is fifth, and they're at less than 2% central banks holding yuan. So it's not like China's made great progress in internationalizing yuan, and you really can't do that if you've got capital controls. So people have only looked at this from gold,
Goldbugs, yeah.
And they're not looking at what China's overall geopolitical and financial situation is, taking into account what their internal goals are. Now, they just had their 5-year planning meeting. They didn't talk about gold the whole time. I don't even think in any of the notes they talked about it once.
And to add to your points there, Lewis, I think the reason that China's buying those treasuries, and they were, to be fair, they were dumping treasuries for a while and then they switched. But I think
they never went below $1 trillion.
Okay, that's fair. So they haven't dumped them completely, but yeah, they did have a very large position and they did want to diversify their holdings.
Sure.
But I think to add to your points there, the other reason China wanted to was, China has a lot of people at the People's Bank of China and also high-ranking Communist Party officials. They are in globalist organizations like the World Bank, the Bank of International Settlements, the IMF. There are connections there that Goldbugs do not want, and people in the alt media do not want to talk about. They want to act like China is, totally distancing themselves, whereas, China is more of a don't rock the boat strategy. So right. China will think long term with planning, but they don't want to totally destroy things. They want to build additional relationships and then start moving maybe slowly things away. But when I also think that they've been buying treasuries to maybe stop Trump from labeling them officially as a currency manipulator and putting tariffs on their goods. And then, when they buy treasuries too, Lewis, that also allows them to prevent their own currency from appreciating. So we talked about this credit bubble that China has. I'm not really sure how they're going to deal with it. I've gotten in really large arguments with my listeners in the comment section of past videos. I'm not sure about you. I'm sure you have too. But they're like, the internal debt is different than the external debt. You're a moron. You don't know what you're talking about. I agree with you. I think we've talked about this. Debt is debt. So China is going to have to deal with their debt problem either with maybe some type of bailouts or some type of currency devaluation or some type of combination because a lot of their state-owned enterprises and other people have, dollar-denominated debt in addition to RMB debt, and I'm not sure if they're going to be allowed to do a debt jubilee.
Well, let me ask you a question, Jason. Here's how you answer those people who say internal debt doesn't matter, if you're cheerleading on China. Ask the people in the United States if they think that the money that the United States owes an unfunded liability falls in the category of money that we owe to ourselves. Does it? Don't we owe a lot of money in Medicare, Medicaid, Social Security? That's all owed to ourselves. The idea there is you could just print it, right?
They're saying the same thing in Japan with the debt that the Japanese central bank, the Bank of Japan, is monetizing. And so, the people who, there's a lot of people in Japan who have sacrificed their savings for the last couple decades to, based on what the government asked them to buy Japanese government bonds. They haven't gotten any compounding of their wealth. So, and in the US, all these unfunded liabilities you talked about, people are not going to get their retirement paid back in real terms. And we're seeing pension funds that are already, coming under the weight that they can't meet their benchmarks.
Bottom line is all central banks are involved in a debt Ponzi scheme. China is no different. In fact, China is bigger. The fact that China might have some gold lying around, even if they have 20,000 tons, I've done a chart. You know what 20,000 tons of gold is worth today?
It depends on at what gold price. Yeah. So
at $1,300, it's $803 billion. That is nothing in the grand scheme of things. Nothing. When you talk about Russia's buying gold hand over fist, they know what's coming. They're preparing and all this stuff. Their fifth largest gold holding in the world, 1,779 tons, I cover it every month, is worth a scant $73 billion. That does not protect them against anything. Oh, but if the price of gold goes up 10 times, so what? They have $730 billion. And the price of gold going up tenfold, that's a bit of a stretch, isn't it? So the idea that people that governments are acquiring gold because they know what's coming and they're going to use it to attack the dollar is complete nonsense. It sounds like a great concept, but when you look at the numbers and the amount of gold that's out there, the amount of gold, what it's worth, it's not worth that much. You know what the real value in the gold is? is the nonsense paper trading is in the trillions. But the amount of gold, if you have a pile of 1,800 tons of gold, you've got $75 billion. So what?
Well, I
That's
think
that's a half a month of QE.
so I think a lot of private sector Chinese are buying physical gold and also cryptocurrencies and Bitcoin because they've been devalued in the past. There's a long history of devaluations in China. The Chinese, I think it was the Tang Dynasty, was the first one with fiat paper fiat currency to experiment with it.
They invented paper currency, China. That's right.
Yes, they invented paper currency, and there's long history. There was a hyperinflation actually before Chairman Mao took over. So they have a history because when the U.S. FDR then started paying above the silver price, it forced China was on a silver standard, and there was a lot of silver leaving China, and the U.S. was vacuuming it all up.
1934. That's right. They actually confiscated U.S. silver. You know, they needed it to make coins because they had sold a lot of their silver in 1918 under the Pittman Act to England, and then they ran out of silver. They did that in order to help England because there was a silver shortage in India. So they sold them gold, they sold them silver at above market prices with the understanding that Senator Pittman, who was from Nevada, would then get the silver mines going in Nevada to replace all of those Morgan silver dollars that had to melt down to ship the silver to India. But when we remined all that silver, it had to go back into the Morgan silver dollars that they were making, and they didn't have enough silver to make dimes, quarters, and half dollars. So by 1934, they had to ask the citizens to turn in their silver so they can start making other than silver dollar coins. And if you notice, if you're a coin collector, the mintages in the 20s for quarters, dimes, and half dollars are abysmal, and that's why they're rare and more valuable, because they didn't have the silver to make them.
That's very interesting. I didn't actually. I'm not into numismatics, so I actually didn't know that. But I know China had a hyperinflation before their communist revolution, and a lot of it was because of the policy that U.S. Congress had with paying a higher price for the silver on the open market than paying a higher price than the spot price of silver on the open market. But yeah, so I think a lot of private sector people in China, Lewis, they're buying physical gold and silver. They're going into Bitcoin and cryptocurrencies because they realize that they're seeing these public warnings, and I think it speaks volumes that people from the People's Bank of China, high-ranking Communist Party officials are willing to go out in public and warn about this unsustainable Chinese credit bubble, and talk about how bad things could get. And I think that's just accelerating why people are getting out of the RMB. So they don't want to hold RMB because they know there's big devaluations and bailouts and other potentially, other things that are anti-freedom coming down the line. And that's
or devaluation.
Yeah. Well, yeah. I've been saying China has been doing a lot. There's from talking with my friends who have lived in mainland China for a while, like Dan Collins. There's always been really high inflation rates there for a long time, higher than the official government inflation rate. And there's been periodic devaluations when China will change the exchange rate on their dollar peg.
Well, they did it 3 times in 2015.
Yeah, so I think they're seeing the amount of credit that's been created lately by China. They know there's going to be bailouts and devaluations coming, and I think the citizens, if you're a Chinese small business owner and you have a lot of cash in your bank accounts, you're not going to hold the cash when you know that there's going to be currency devaluations coming. You're going to diversify out into physical precious metals and Bitcoin and other cryptos.
Which is why the internationalization of the yuan is going to take a long time, and China needs to regain credibility. Foreign investors need to understand is China going to do about its debt crisis. See, at least with the United States can count on the rest of the world to buy its debt. China can't. And that's a huge difference, and they need debt to continue to try to keep their economy growing. How are they going to do it? I think they're in a bigger bind than the United States is. Now, I think they're all in a big bind. They're all, the ECB, Bank of Japan.
China could go first. China could collapse first, theoretically, because they don't have the world reserve currency. So, yeah, everyone's in trouble. But, yes, China could collapse first because they've overdone it on this acceleration of their credit bubble, really since 2009 with the stimulus.
And they actually need to do the stimulus more than the West does because they have this need for growth because they have 200 or 300 new people in cities that weren't there before, and they need to hold on to power.
So if things get that, I agree with you that the Chinese government could definitely do that. So if things get desperate enough, Lewis, do you see then that the People's Bank of China would call up the Federal Reserve and say, you know what, we want to maintain power. Let's do a multi-trillion-dollar currency swap. We need, $5 trillion right now.
Anything is possible because all of the central banks are relying upon keeping the fiat Ponzi stimulus going. And for better or for worse, the reality is the dollar is the linchpin of that whole system. Because
I agree. The dollar for now is, and treasuries are also viewed as good collateral for now. So treasury and everyone still wants treasuries for now.
Right. So no country is going to step up and say, like China, we have a lot of debt issues. So what we're going to do is we're going to collapse the dollar. That would destroy not only their own economy, but destroy the world economy.
Well, there's also issues too. Not only that, Lewis, there's also issues too with being the first country when everyone is on a fiat system to go to a full gold standard. Is you risk totally destroying your exports.
Correct.
So your exporters would be totally destroyed if you go to full gold standard. Not only that.
Hold on. Who's most at risk for exports?
China.
China's whole economy is based on exports. They're not going to say, why don't we just back the yuan with gold, and now we're just going to forget about exports and we're just going to consume internally. That might be a long-term strategy. You don't do it overnight, because if you did it overnight, you would create a massive depression in your own country. People would be out of work. They couldn't support the economy, and they'd be overthrown.
Exactly, and the Chinese don't. We discussed this earlier. The China is don't rock the boat, so they're not going to do. They don't want to do anything overnight and just flip the switch. That they don't want to do that. So they want to gradually transition their economy from all exports to more of a balanced consumption economy.
Right. So one thing we have to make clear, though, Jason, that there is a story out there that sometime in December, by the end of the year, China is going to flip the switch and introduce the gold-backed yuan. That is 100% nonsense. That is not going to happen. If anything happens in December, it will be they introduce the yuan-denominated oil's future contract, as I outlined earlier, which is nothing more than a hedging instrument. It has nothing to do with upsetting and creating a Petro yuan and creating and allowing oil producers to just pull gold off the Shanghai Gold Exchange. That's not going to happen in December. It's not in the Chinese interest for that to happen. It's only in the interest of someone peddling a story for that to happen.
Well, let me just add to your points there too. So China is now the world's top gold mining country. They've surpassed South Africa, and they don't allow any gold to leave the country. So maybe there's a little bit of gold exports that occasionally leave Hong Kong if you're a tourist, but it's not a massive amount in general. The Chinese government does not like gold, massive amounts of gold tonnage leaving the country. So for China to go on a fully gold-backed Petro yuan, that would require a lot of gold to leave their own country, which, Lewis, basically China has made that clear they don't want that happening right now.
So they changed that. So they changed that story to the gold's going to be sourced from outside of China. That people are going to take the yuan and go buy gold on the NBMA and COMEX. Which, by the way, you can't use yuan to buy gold on the LBMA and COMEX. So they're on this. They're going to drain the West's gold nonsense story.
Yeah. So a lot about that doesn't make a lot of sense. Now they do want a Petro yuan, but it's not going to be gold backed. So
correct.
So it's just
that's
like
going to take some time.
Yes.
Now, first of all, one of the countries that have agreed to take the yuan is Venezuela. Well, that's great. Venezuela is bankrupt. All Venezuela is going to do is immediately convert their whatever yuan they get into dollars so they can try to pay down their debt, because no one's going to take the yuan.
And also, to add to your point there too, China has already done, the People's Bank of China and Chinese government already did a large currency swap with Venezuela. This was announced about 2 years ago. So since they were a main trading partner, but Venezuela is not the largest producer of oil, and Venezuela still ships the majority of a lot of their oil is refined at U.S. Gulf Coast refineries.
Yeah, so did you know that Venezuela had a gold swap with Deutsche Bank?
I'm not surprised they're broke. They're selling all the assets they can to.
Well, what happened was they had to let the swap lapse, and Deutsche Bank got the gold, and Venezuela got the $1.5 billion. So now Deutsche Bank has a good portion of like 4 or 5 tons worth of Venezuelan gold.
let me just, I'm not surprised about any stupid thing Venezuela does financially. I mean, like, eventually they're going to run all their oil production into the ground. They're not spending really any money upgrading their refineries. From what I've heard in the last couple of years, they actually have military guarding the oil fields and the refineries, so people who can't feed themselves don't, break in, steal the oil, and try to sell it on the black market. So, eventually, because they're not reinvesting any of their past oil profits into upgrading their oil refining capacity and all those things, their oil production has already fallen a lot, but eventually it'll collapse.
You know that they're mining. What's interesting, I understand that because it's a socialist country, that if you get electricity, you don't pay much for it, and they're mining Bitcoin and Litecoin, the people, to make a living there.
Yeah, over 100,000. And Reason Magazine earlier in the year ran a story, and supposedly, they subsidize their electricity, like you said. So the normal market price for electricity would be a lot, especially if you're running, mining rigs
right.
to mine cryptocurrency. Your electricity bill is going to go through the roof normally, but because it's only 1 or 2 cents, electricity costs down there, it's subsidized. So you got a lot of Venezuelans who are buying, computers and doing it to earn extra living. And there was a Reason story about this earlier in the year, and the Venezuelan secret police actually started confiscating the mining rigs for themselves, and they're doing it too, just to get cryptocurrency to go online and buy food and other stuff.
Well, they can't use the Bolivar. No one will take that. And obviously, well, and if they start taking Yuan, they're going to have to then go through the conversion process to get dollars, because their creditors are not interested in taking the Yuan either.
Yeah, so basically this, I think we've talked about this in the past. There's going to have to be some type of system reset, but what the Goldbugs are expecting, that the China may have the sole world reserve currency, they're just not ready for it. Their markets aren't ready for it. They've created an enormous credit bubble. They're not ready to have sole world reserve currency. China's already, in this SDR. The SDR is not really, it's not viable for a world reserve currency, but it might at some point, replace treasury bonds, U.S. treasuries, as collateral. But the U.S. wouldn't get totally destroyed in that scenario, because the SDR basket, Lewis, the U.S. would lose a lot of their reserve status, but it wouldn't go to zero. They would still have.
The breakdown is 41%, 47%, I think, U.S. dollar. It used to be 40% euro, but they had to drop the euro down about 31% to bring China in. So it's made up of pounds, yen, yuan, euro, and dollars. But the thing about the SDR is China would prefer that as a transitional step, because they have a seat at the table, and they wouldn't have to clean up. They wouldn't have to clean up their entire balance sheet in order to gain a reserve currency, because they'd only be part of. They can continue to do what they do, and if the yuan is devalued as a result of what they do, or whatever reforms they want to do, they just lose a little status in the SDR. But if they wanted to become a world reserve currency, they're not ready for it at all right now. They couldn't even come close to it. So they're actually pushing for SDR to be a reserve currency, rather than themselves trying to create them, make themselves become the reserve currency. The problem with an SDR, though, is that it's based on 5 different currencies, and the SDR itself is not backed by those currencies. That would defeat the purpose. It's a way of adding more liquidity. So they just say, the IMF, that we're going to issue more SDRs, and they're based on the values of these 5 currencies. So it's actually a derivative of the 5 currencies without any backing. And that's how they think they're going to reset the whole system, is just hand out to all the central banks more SDRs. But if you think about that, that doesn't change anything, because what the countries can do is what they are doing already. Each country just keeps issuing more of its own currency. I don't see how it changes anything by issuing SDRs and saying, well, now you've got in your reserves, you've got 5 different types of currencies that we've assigned value to based on the value of those 5 currencies.
But Lewis, the people in power, the globalists at these organizations, who are running central banks, who are at the head of each treasury department in each government, who are running the IMF, World Bank, Bank of International Settlements, they don't want any major changes. They like the status quo.
Correct.
So they want either a continuation of the current status quo system where most of the people are brainwashed, lied to, and asleep and don't really understand what's happening, or they want another similar system in this global reset that's very similar to the system we have now.
So when people say they're going to add gold, and the rationale for them adding gold is they say that people will need confidence. Their confidence will need to be brought back, so they'll have to bring gold back. Well, first of all, if you ever watched a Mark Dice video, people don't even know what gold is. You offer them a chocolate bar or a bar of gold, they'll take the chocolate. So people aren't clamoring for gold to back anything. In fact, they'd probably go for a chocolate-backed yuan before they go, an SDR, including chocolate in the SDR, than they would gold. I've seen those videos. The average person does not have the monetary connection to gold or silver. They may have had it in the 70s when silver had been part of the monetary system and across the world in the 60s. They may have had it, up to the mid 80s. But there's 2 generations now that have lived without any backing whatsoever. And in fact, that's why you have cryptocurrencies, and they don't seem to be concerned one bit that the cryptocurrencies are not backed. You only see older people talking about cryptocurrencies will only be good if they're backed by a commodity.
And people don't have, any financial education. They don't even have most Americans adult Americans don't even have $1,000 in their savings account. So people can barely balance a checkbook. I think this was intentionally not taught in schools. People don't know what money is. People don't even know what the Federal Reserve is. If you did like a Mark Dice type of thing and asked people what the Federal Reserve is or who Janet Yellen is or who Jerome Powell is, they wouldn't know.
So they're gonna protest if the economy collapses and the banking system collapses and say we need gold. No, they're not.
Well,
what happened the last time? They asked the central banks to fix everything.
Yeah, so I think the point, so I don't want to discourage people who are buying gold and silver too much, but I think the whole point of the discussion, the main point that Lewis and I are saying, is that you shouldn't buy gold because China's going to, crash the dollar, dump their treasuries, and they're going to all of a sudden move gold to $10,000, $20,000 an ounce. That's just not going to happen. In fact, it's in China's strategy right now because they want to accumulate more physical gold to basically keep the price down. But obviously they can't keep the price down too much or the miners are going to go bankrupt and then there's going to be supply problems. So maybe one of the reasons there's some type of weird manipulation arbitrage. I don't know if the Chinese are doing it, the Chinese government, private sector Chinese, or the bullion banks. But the copper price and the base metals prices just had huge rallies on. I don't think for any fundamental reasons. Maybe there were some short covering rallies, but I don't think there's any fundamental justification for it given the global economy. And, one of the side effects, one of the effects of a higher base metals price is there's a lot more physical silver byproduct available. So mines that were marginal, that normally would have shut down if base metals were not doing well, that had a lot of silver as byproduct, those mines are either going to be running still, or there's going to be new base metal mines with more silver byproduct that gets funded.
You mentioned that. It's an interesting theory of yours, and I tend to subscribe to that. Also, I think when you try to add up the silver, and they always come up with there's a deficit every year, and it doesn't make any sense to me that there can actually be a physical deficit for 15, 20 years. I think there's a deficit because a lot of that silver is not significant or material to the base metal miners' operations, but it's still a significant amount of silver, and it doesn't get reported as such. So I think what happens is all that silver gets mined, it gets sold, but it doesn't get recorded as silver production. It gets put into like in Barracks or any of these companies. They can have a line that's called other that could be significant, but it's still less than 5% or 4% of overall financial. So they don't actually report on it. They don't actually specifically label it silver.
Well, if I was going to do like a hypothetical exercise like what we would have done in law school, I didn't finish law school, but I did do it for a little bit. If I was going to do a hypothetical exercise and put myself in the mind, of a bullion bank or central bank or criminal or someone trying to manipulate a market, and I was looking at the silver market, the majority of the annual silver supply is from silver byproduct, not from primary silver miners.
Right. So
obviously you don't want to bankrupt all the primary silver miners either because that's about 30% of the annual silver supply, but you're not going to care about that much of the supply as much as you would the silver byproduct from the base metal miners, which is double the annual silver supply of primary silver miners. If I was manipulating a market, that's the supply I would care about, because I would know then that the copper miners and the other guys, they don't care about their silver byproduct as long as maybe they get something for it. Those are going to be the ones that are going to be more likely to hedge it too.
Correct. And if you look at the large mining operations, most of the primary silver mining are in South America and Mexico. But if you look at the rest of the silver that comes as a byproduct of non-silver mining, of base metal mining, it's spread out all over the world into these very large conglomerates, and they don't necessarily list the amount of silver that they're producing.
Yeah, it's all over. So there's Russian base metal miners with a lot of silver byproduct. There's large Australian ones. There's large ones in Asia. And
Africa, yep.
Yeah, all over. Because silver is a very common byproduct. At least in the past, it was for a lot of base metals, for copper, lead, and zinc. So it's very interesting. I think we're going to have higher gold and silver prices because the miners are just. I don't know if you saw this last month, but First Majestic Silver did a presentation at the Denver Gold Forum, and they're one of the lowest cost primary silver producers in the world. And they've had 2 really bad quarters in a row, and they just said straight up they can't cut costs anymore,
right?
Because they don't have the money, huh?
They've already done it. They've already pulled the low hanging fruit.
Yes. So they've spent, since the paper bear market in silver since 2011, they've spent a lot of time and effort hiring consultants, figuring out which employees they could cut, to cut any and all costs to the bone. And you cannot, there's so many investments required at a mine, and there's lots of, maintenance capital expenditures that you can't perpetually cut costs. There's just too many cost variables and other things that pop up. And so they basically, Keith Neumeyer said this presentation at the Denver Gold Forum, he basically said, look, we're not going to be able to cut costs really anymore until the silver price goes back up and we could start and then we have the capital coming in to go and make more investments, long-term investments. And he said, until that happens, we're going to have to tread water and do what we have to do to survive, but we're not going to be able to cut costs and keep our margins tight. So I think, the bullion banks and the manipulators are somewhat aware of this, but someone's been taking it. There used to be like a really big, in the past, it was more prevalent, a really positive correlation between copper and silver. Whereas, if copper price rose, the silver price also rose. Mm-hmm. It wasn't always the same percentage, but normally so if one went down, the other went down. If one went up, the other went up. And I think, lately I've been noticing a divergence in that correlation.
Well, what's happening, I don't want to, as you say, you don't want to discourage people from buying gold or silver. And again, I don't give investment advice at all. However, there are bullish cases, there are bearish cases for gold and silver. But what I object to on my channel is stories like the gold-backed Yuan that have no source. In other words, if that was a real story and it had been announced and it made sense that they were going to do it, then you could start thinking about and calculating how much this would mean. But when you just throw something out there and it has no source, and then everybody believes it and everybody parrots it, and then the gold price doesn't move, you have to wonder, well, markets aren't stupid. Maybe the people that listen to this stuff and believe it, maybe, but they're not stupid. They actually think, well, everyone's saying it, it must be true. And the point is that unless the story, you can verify it, and not only verify that it makes sense in the aggregate for them to do it, it's not going to happen. So that's what I'm saying is you can make up scenarios like yours. You can look at the mining production. You can look at it from supply and demand. You can look at it from.
But I'm not predicting $100 silver next year or in the next 2 years. I'm just saying silver needs to go to $25 to $30 an ounce, or these silver miners are going to be in huge financial trouble.
And that's based on your research. That's fine. The other thing you can base it on is you can look forward and say the type of demand that you can see coming down the pike. You can make assumptions. They can be challenged. There's nothing wrong with that. I'm just against when you just make something up and then claim it's true. And then from the made-up story, all these other assumptions come into play of what's going to happen. Go ahead.
The other thing, Lewis, we forgot to bring this up that really, and then we'll switch to cryptocurrencies for the rest of the interview. The other thing that really pisses me off is that we have a lot of these libertarians and Austrian school people that are defending China, because China has so many problems. Yes, they're accumulating a lot of physical gold, whether they're private sector Chinese citizens, the Chinese government through multiple entities, as you and Kuz Jansen and others have covered, are accumulating gold. But there's a lot of social problems in China. I mean, just to listen to this interview, people in China need to use like a virtual private network.
So they can't, sure.
Yeah, so that their social media, their Twitter, their Facebook, YouTube, those things are blocked. I mean, that's starting, YouTube is doing that now to people's channels, but China does that in general. They have, large police units monitoring social media. You can't protest there. If you protest in China, you run the risk of getting arrested. Their court system is corrupt. There's a lot of problems there. as well. And I'm not sure the exact number of executions they have for protesters if you're such a large dissenter there, but there's definitely civil rights problems there too.
They had 1,000 executions last year. Having gold or liking gold doesn't make you smart. It doesn't make you sound money. It doesn't make you libertarian. It doesn't make you free market. It just means you own an asset. And that's what China is. The way you define China is not by their gold holdings. You define them by what they do, by their debt, their lack of transparency, their capital controls, their central planning, and the fact that they said that they are communist. And they are saying that they're making communism work for the first time. That's what China is. Well, China is not first and foremost a gold hoarder.
I would agree that they're not first and foremost a gold hoarder. I think that's a mistake a lot of people in the gold community are making. But I wouldn't say they're fully communist. So they're kind of a mixed model of things because their state-owned enterprises are extremely corrupt. But those are the stocks that a lot of people buy. Those things are, very inefficiently run. There's probably a lot of rot on their balance sheet from financial engineering that's being hidden.
Right.
And those things will need bailouts too, along with their state-owned banks. I think the Chinese government owns 90% of their banks. So those are going to have some type of bailouts because those guys were basically ordered or threatened that they had to give out loans to municipalities and other, politically connected businesses that they knew would go bad.
Right, and then they had to extend the loans,
Yes.
They had to loan them more money. So basically, as I mentioned at the outset, you have zombie firms and zombie banks supporting those firms, and a lot of those firms built the ghost cities that no one lives in.
Yeah, so China has a lot of problems, and it's Keynesian central planning gone awry. So I'm just fed up with a lot of people defending a lot of their actions. The U.S. government is also bad. There's a lot of problems. I hate U.S. foreign policy. I criticize every government. So I don't like. There's almost no governments, Lewis, in my opinion, that are doing a good job right now.
Well, one last thing before we get to cryptos. Then there's the whole thing. The United States has no gold. They're convinced of that. Everyone's convinced of that, and then China has all this gold, and therefore China has gold, good, the United States doesn't have gold, bad.
Well, the U.S. also has a giant military, which everyone, including China and Russia, are totally afraid of.
Of course.
And I'm not sure if you've been paying attention to this. I've been putting out short videos recently, but last year, about a year ago, in August of 2016, the Pentagon admitted that they have over $6 trillion that they can't account for.
Right, and now it's even more than that.
Yeah, Catherine Austin Fitts has some. Well, let's just say it's compelling evidence. So it's not fully proven, but it's more than circumstantial that $21 trillion additionally could have been created out of thin air by the Federal Reserve and Wall Street banks, and then given as to the military-industrial complex and the Pentagon to spend on all kinds of nefarious, devious, advanced weapons projects.
Do you remember? We remember when the United States, 2 or 3 weeks ago, said they were going to kick China out of the SWIFT system if they didn't comply with what they want them to do in North Korea?
Yeah.
What did China do? They did exactly what the United States asked them. They threw everyone from North Korea out of Beijing.
I hope I'm wrong about this, Lewis, but I honestly think North Korea is going to be used just like Hiroshima and Nagasaki were used for test cases for new weapons. So I hope I'm wrong about this.
I hope you're wrong too, but that is a possibility.
So I think there's a lot of Jim Rickards has actually already planted this out there in public, and he had like a 6-hour meeting recently with the CIA director and one of the heads of the National Security Council, General McMaster, and he said that basically He said the U.S. has designed a type of new explosive that has the power of a nuclear bomb without the radiation. And
they've had that since the 70s with neutron bombs, they were called.
Oh, really?
Yeah, they were going to do neutron bombs where they had the radiation, but they didn't. That was what they had. Anyway, I'm sure there are all kinds of weapons of mass destruction. They're the mother of all bombs. There's plenty of things that they can do, and you're right. You can use it as a test bed for whatever this weapon is.
Like the current military that the U.S. has on display all around the world, that's like old tech, and the U.S. is not they're keeping a lot of the good stuff secret. So
when you talk about that kind of money, and you talk about getting scientists, and you talk about look what China did when they decided to use the government. That's the one thing a government can do even bigger than the free market, is they can corral almost the entire society's resources and throw it at a project like the moonshot or something like that. If they wanted to come up with some type of weapon, there's no limit to the ingenuity of people, and if you have the ability to fund it, they'll come up with something.
Well, have you seen that the U.S. has been putting out videos showing their railgun experiments and improvements on those since 2008?
No.
It's an energy projectile weapon, and I think to fire it once, it requires enough energy to power a small city. So it goes, I think, 3 times faster than any explosive propelled weapon that can be currently fired.
And think
Goes
of
3 times.
and think of all the Bitcoin you could have created with that energy.
Well, yeah. This is government central planning. You cannot have these type of expenditures, Lewis, without a central bank and fiat money, right? So
Correct.
you have to, in order to have a global empire and a welfare warfare state. Governments in the past, either they were clipping coins,
Yep.
or they were going to paper money and lying about the supply, or they started doing what the Bank of England did, and they started they created a central bank. And then they started going on fiat money.
Yep.
Or cheating with their gold standard.
There's no profit in creating weapon systems or going to the moon, so the free market probably would never do it.
Well, there's no profit now. Eventually, space travel will be profitable. So, just not right now. But eventually it will. I mean, there will be space tourism. There will be mining in space at some point in the future. But, yeah, not right now it's not profitable. So, you're subsidizing things for the future. But yeah, at some point in the future, probably after we're both gone, it'll be profitable. But the last couple minutes of the interview, I want to talk about cryptocurrencies. Do you think then that we're going to see Bitcoin go to 20,000 or 30,000 before we see gold at $2,000 an ounce?
Yes. You want to know why?
Yes. Why?
Okay, so there are so many people, not when I say many people, I don't mean 50% of the world or 20%. There is enough institutional interest in Bitcoin with big money. And that's why the CME group is all over this, and they're going to have a Bitcoin futures market set up. Now, the difference between Bitcoin and gold is, I think right now there's 16 million Bitcoins out there that have been mined, and there's a total number of 21 million. They've probably lost 1 million of them. So let's say there's 20 million Bitcoin. There's nothing. If an institutional investor wants to buy Bitcoin, he's not going to buy a Bitcoin. He's going to buy hundreds of thousands of them. Well, there's not that many of them. That's going to put price pressure on it. The way today, when somebody wants to buy gold as an institutional investor, he goes and buys an ETF. He's not buying anything. Or he just trades futures contracts. And then the way the futures contracts trade, or perhaps even the ETFs, there's not ounce for ounce behind the purchase of the gold. So when people, even if there's tremendous interest in gold, that interest gets hoovered up in paper gold, of which there's a much larger supply of than there is actual physical gold. Now, the thing with Bitcoin is, you want Bitcoin, you have to buy Bitcoin, and there's not that many of them. So even if the demand for Bitcoin in dollar terms is a tenth of gold, or maybe even 20th or 50th, the size of the Bitcoin market is so tiny that it will push the price up to 10, 20,000. Now, it may sound like that's a bubble, but there is no valuation on Bitcoin. There is no profit that it makes. So it could be anything. I think someone defined it as a collectible. Is a Picasso worth 3 million, or is it worth 9 million, or could it be worth 25 million? Someone wants it, and it's the only one, it goes higher. Again, if institutional investors, even just a small number of them, hedge funds, want to buy Bitcoin and they put their money towards it, it's going to go higher. That doesn't mean it's justly valued. You don't even know what the value of Bitcoin is. So yes, I think that Bitcoin easily can go higher. That's not an endorsement of it. It's just Blindfeld said, the head of Goldman Sachs, that he is open to Bitcoin. Forget Jamie Dimon calling it a fraud. And he used the example with gold. When people first created the gold certificates, no one thought, well, this doesn't work. I want the gold. Then people eventually, they went along with the gold certificate. And then you had fraud because they issued certificates. Then they took the gold backing away from the certificates, and they took the silver out of the money. And guess what people did? They didn't bat an eye, most of them. People started, because the government stamped something on it, and people believed that it was worth a quarter or a dollar, whatever was stamped on it. And now he's saying that if people just want to, by consensus, say a Bitcoin is worth $20,000, that's what they're going to do. And if a market says it's $20,000, it's $20,000, whether it's backed or not. if the consensus is made up of people who are in that market and they want it for whatever reason, they consider it a financial asset, they're going to pay for it.
Couple points I want to talk to you about. So I've interviewed Trace Meyer many times since 2010. He was one of the first big name investors into Bitcoin. He put a lot of his net worth in there. He's buying it well under $1. He's been telling me for years, Lewis, that there's at least 4 million Bitcoins that are lost.
Okay, so now you're down
there's at least 4 million.
Now you're down to, we're already at the limit. There's only 16, 17 million.
Yes. So he's saying there's at least 4 million Bitcoins that were lost. It was done in the first year or two where a lot of coins were mined and people just either forgot their key, their computer got destroyed, they lost their hard drive. These were, the early adopters, the computer programmers running mining programs.
Yep.
Who changed computers or forgot their keys. The early adopters were pretty much just tech-savvy computer programmers or libertarians and anarcho-capitalists, and that was about it.
And I bet you Litecoin's probably lost an equal amount or more.
Yeah, I'm not an expert on Litecoin. You know a lot more about Litecoin than I do. Actually, I have a lot of my listeners telling me to set up a Litecoin wallet so they can donate. So you should probably tell me how I can do that, because I'm not very tech-savvy. But yeah, I think the cryptos. One of the cryptos, I think these initial coin offerings, there's so much fraud. I think they're definitely a bubble. I think there's legitimate technology advances for a number of these altcoins. The valuations, for some of them, are just getting kind of ridiculous. But, the price of Bitcoin is so high that people don't want to buy a Bitcoin, so they're going to put money into these other gamble and these other altcoins instead.
Well, I think you have to make a distinction between a altcoin, Bitcoin, and ICOs. ICOs are the most risky because they're basically saying, look, we're a company, or you're going to get a token in the company, and this is going to happen, that's going to happen. That should be valued as if it was a company. And if the company has no profits, then there's really nothing there. You're just buying speculation. The difference between cryptocurrencies and ICOs, let's compare an ICO with Bitcoin or Litecoin, is Litecoin and Bitcoin can be viewed and have been viewed. In fact, the CME group said that Bitcoin is a store of value. You never call an ICO a store of value. That's speculation. And that Bitcoin and Litecoin are mediums of exchange. They can be used as currency. So there's a use case. I'm not valuing them. I'm saying that they actually are different than ICOs, which have to be valued based on what they produce, whereas Bitcoin and Litecoin are more akin to gold in the sense that they don't produce anything. They just are, and people supposedly want them for their value or for their use. So that's why I think that the cryptocurrencies are less likely to be in a bubble than the ICOs, which are just a byproduct of trying to. And you think about, most ICOs are funded by things like Bitcoin, and most of them are funded by Ethereum, which is another type of. It's not a currency, but it's another crypto.
Yeah. So yeah. Ethereum has a lot of security concerns, but there's a lot of innovation potential there. I remember you interviewed an expert a little while ago, and he was talking about the differences in blockchains between Ethereum and Bitcoin. And Bitcoin is secure and has limited supply, and they don't want innovation on it, and that's for security purposes. Mm-hmm. And then Ethereum has a lot more innovation, but there's going to be eventual, hacks and breaches and things like that.
Right. You could do more. You could do more with Ethereum, but the thing is that Bitcoin does one thing, does it well. It's secure. And just quickly for the listeners, what Litecoin is basically a copy. It's an altcoin. It's a copy of the Bitcoin protocol, and all of the differences. The creator of it, Charlie Lee, made it so that it's silver to Bitcoin's gold, and it has 4 times the number of coins that Bitcoin has. So it's meant to be the same thing as Bitcoin. And in fact, it hasn't gone through this forking and internal drama that the developers and the miners are fighting over in Bitcoin. Litecoin doesn't have any of that. So I think eventually, if this thing takes off, people are going to say, okay, when you had Yahoo and Netscape, and they said, what's this AOL over here? I mean, there can't just be one thing in the space that all the institutional investors are going to go for. They're going to go for Bitcoin first. That's what they know. But then I think if it has staying power, they'll start to look at these altcoins. And then I think what they'll do with the ICOs, instead of having them touted by celebrities and just people putting out white papers, they'll regulate them. You'll have Silicon Valley involved. You have a banker involved. And they'll bring these companies with the business model to market in a more orderly fashion, in a more regulated fashion.
and you have firsthand experience in the technology bubble because you were working in Silicon Valley as one of the managers for a technology company in the real estate field, competing with Zillow.
Well, I also did initial public offerings, so I know how that process works, and I know that the Silicon Valley and Wall Street have missed out on billions of dollars of offerings this year because they've all been handled under the radar, and some of them in violation of SEC rules.
Yeah, initial coin offerings have taken, you've talked about this in videos in the past on your channel, taken a lot of fees away from investment bankers and also venture capitalists in Silicon Valley. But I think there's an argument to be made, Lewis, that pretty much everything is in a bubble, and it's not
other than gold and silver.
Yes, other than gold and silver. Pretty much every other asset class, or even like consumer items and other things, some of these things are starting to be in bubbles. Even The Economist a couple weeks ago ran an article asking if everything was in a bull market. So, I think there's an argument to be made that stocks, bonds, real estate, all these things are in immense bubbles. Especially, and the main cause of this is, not speculators per se. I think it's central banks.
Sure.
I think it's
they're providing a lot of the demand, and they're backstopping the demand so people feel comfortable putting their money in.
Well, they've also created tens of trillions of dollars in easy money and credit since 2008 to make it look like there was a real recovery. Correct. To paper things over. And, that money, I'm sure they didn't want all that money to go into asset classes, but it's leaked into a lot of things that the central bankers didn't anticipate it going into.
Well, actually, they did. If you read Bernanke and Yellen's quotes when she first started, they wanted to promote the stock market and real estate markets. They wanted to boost asset prices. That's what the recovery was. They weren't going to create jobs. They weren't going to create a new economy. They were just going to reflate the value of the assets. That's all they can do, and that's what they've done. And by the way, China led the world out of the recession in 2008, and they're still doing it by massive credit creation.
Yeah, I'm very familiar. I'm very familiar with the wealth effect. The other thing is governments actually, they keep the tax revenues either the same or increasing if they can boost asset prices and nominal value. So they underreport the real inflation rate, and that actually keeps the tax money coming in. So all these stock traders and people making money off bonds and real estate, they may not have any real gains after you account for a real inflation rate, but the tax man's still going to ask you for your large capital gains.
Absolutely, absolutely. And the same with when you sell houses. You make a gain, you gotta pay it unless you can flip it into another house. But you're right. And when the stock market generates profits, that's capital gains tax, short-term, long-term capital gains. That all goes to the government. And that's why I think what they want with cryptocurrencies, they want to take those cryptocurrencies, put them on regulated exchanges, and that's why Fidelity is integrated with Coinbase as on a test basis, because Fidelity's missing trading revenue. And once you're on Fidelity or Charles Schwab and you're trading Bitcoin, Litecoin, Ethereum, it's all tracked, it's all taxed, and it's all money that the banking system makes. And it's money for Uncle Sam. So I don't think these people saying they're going to arrest you, throw you in jail for using Bitcoin, those days are long past. It's far more efficient for Japan fully regulates cryptocurrencies, and I think the United States is going to do exactly the same thing.
It'll be interesting to see what happens going forward. But yeah, that's an interesting argument you posed for why they're allowing the cryptocurrency prices without, manipulating those markets or putting excessive regulation in them, because that would slow the price down. That would take away a lot of their tax revenues. So we'll see. And then also they can copy and paste the block. If you're a government, you can copy and paste the technology behind Bitcoin, the blockchain technology. Since it's open source, you can copy and paste it, and you can put it on your own government-backed coin like the crypto ruble or something else, and then you can force people, you can start eliminating cash, so you can track and tax every single transaction. And people, if you're a younger millennial or you have a lot of profit speculating in Bitcoin, you're probably not going to complain as much about, being forced into a digital government-backed currency.
You're already used to it. The only problem with government cryptos is they'd be on a centralized blockchain, and they wouldn't have the same security as being on a decentralized one. But for the average person who doesn't know the difference, and you just tell them, like if they did the digital dollar, the Fed coin, people would just say, okay, so it's still fiat and it's Fed coin. So what? They don't care that it's cashless, and you don't see people putting up a big stink over them taking cash away. I wrote about this 2 or 3 years ago. I said there is no war on cash because no one's complaining. No one's really fighting it. We're just moving into the cashless society, and no one really seems to be complaining. In fact, when India did that demonetization of the rupee, I thought that's it. The government's going to lose control of their people. And most of the people supported that move. I was stunned by that. When they
government conditioning, right? So this is a new normal now. The majority of people wouldn't even, they're such docile sheep, or they think totally differently than you and me, that they're not even going to complain when the government takes away their freedom, taxes them more, inflates away the value of their currency. They don't know or care.
Well, what was that expression by Ben Franklin? He said about security.
You can have freedom or security, but you can't have either.
Something like that. And I
think I'm butchering it.
No, I think it was something like those who will give up, I think, freedom for security won't get it. And I just view that as convenience. Forget freedom. You can give somebody convenience, and they're like, "Well, that's good. Okay." They don't realize the consequences that they can be kicked off the system if that's the only system. They just think it's convenient for now, and they don't see past their nose that they have now been put in a cashless society. And basically, they're at the whims. The money is not yours. It can be recalled, and they're stuck with it. But they don't care because it was convenient. Now they don't have to carry cash around.
And I could speak with you about this and other topics, Louis, for a lot longer. We're well over an hour, a lot longer than I planned on doing. I really enjoy your work. You present a lot of great content that's unique compared to other people. Your YouTube channel has over 2,500 subscribers and almost 400,000 views now.
Something like that. Yep. It's a slow slog. No one really wants to hear what I'm saying in large amounts because I'm not cheerleading one way or the other. I'm presenting what I see.
Well, just people like me and some of my other listeners appreciate it. So keep up the good work. And if our listeners want to find more of your work or support you, how do they do so?
Oh, thanks, Jason. Smaulgld.com is the website. There's a Smaulgld YouTube channel. You can find me on Twitter. There's a Facebook. Hey, Gab, BitChute, VidMe. So the Smaulgld is everywhere for its 2,500 YouTube subscribers and about 1,000 Smaulgld.com subscribers. So thank you very much, Jason, for having me on today.
Wall Street for Main Street needs your help. Since the middle of 2016, YouTube continues to increasingly censor and sabotage the growth and success of my channel with dramatically slower or no subscriber growth, a huge decrease in views per month compared to 2016, and well over $10,000 lost in Google AdSense revenues the last 18 months. I should have been way over 20,000 subscribers and way over 3 million views last year, but it feels like I am Sisyphus trying to roll a heavier boulder with more and more additional weight up a steeper and steeper hill. In the last few weeks, all of my videos have been set to demonetization by default, and I have to manually protest each video. This is in addition to even lower than usual Google AdSense revenues after the adpocalypse started over a year ago for me. This has also affected my ability to get paid advertisers to agree to deals not involving YouTube, as I lost $3,000 per month in paid advertising deals at the end of June 2017 because all my analytics are down a lot thanks to YouTube censorship algorithms that have intentionally kneecapped the growth of my channel. With YouTube/Google/Alphabet /Don't Be Evil strongly considering demonetizing or setting all libertarian, conservative, or pro-Trump content to private to prevent any sharing or monetization, it is imperative I have a contingency plan to figure out how to make a living off my content. Each 30 to 40 minute video takes a few hours of my time before it's released to the public. There's a strong possibility that in the near future, YouTube will force me to move all or almost all my content to a new video upload website that allows free speech or behind a paywall on my own website. Thanks if you have already made a one-time or recurring monthly donation, and thanks in advance for any future donations as I decide the future of my channel and what to do with my content going forward. We accept one-time donations on the Wall Street for Main Street website via PayPal, Bitcoin, or Gold Money. You can also become a monthly Patreon contributor for $1 or more a month if you want to help me out. And don't forget to like each video on YouTube and share it with your friends and family if you think they would like the content.